I'm Steve Garth from the Advise Wise Investment Committee. Even though it's not quite the end of 2020 yet, we thought it was a good idea to do a review of 2020 and perhaps have a look at what we might expect in 2021. Now, I'm recording this on the 1st of December, and the last month has seen the ASX 200 rise by over 10%. Now, that's the best monthly return in over 10 years. But in order to talk about 2020, and we know the main theme of 2020, but why don't we go back a little bit and see what got us there, what was happening in 2019. So the chart I'm putting up now shows you the performance of both the ASX 200, the Australian market, and the S&P 500, the US stock market. I've got these starting at the same point, but you can see, all in all, it was a really good year for investors. And of course, that's actually coming off the end of one of the great bull runs, the last 5 years prior to 2020. Now, let's have a look at 2020. And of course, things were still going along well until news of that virus started and the economic effects of that virus were felt, and the market tumbled down by as much as 40%. But it recovered very quickly as central banks around the world provided liquidity in the market through various stimulus measures. And what you can see now as we're approaching the end of 2020 is, to a large extent, markets have recovered. Australia is a little bit under where it was back in the end of 2020, but the US market is actually at all-time highs. Now, the reason that the US market's doing so well can actually be put down to a group of stocks that collectively are known as the FANGs. It's an acronym for Facebook, Amazon, Apple, Netflix, and Google. These stocks, large information technology stocks or tech stocks, wow, they're about 20% of the S&P 500, and they have had a phenomenal run, up over 100% over the year. And you could see that if you took out those FANGs, the US market's probably returning something more similar to what the Australian market's returned. Still a phenomenal return. So to recap, when the pandemic hit, Australia experienced its sharpest economic downturn since the 1930s, but policymakers reacted quickly, and that helped lessen the impact. Equity indices, they bounced sharply back from their lows. And in the US, those mega cap tech stocks really explain a lot of that positive 2020 performance. In Australia, IT is also leading the way, but it's got a much smaller weighting. And in fact, it's the weakness in financials that account for most of the ASX 200's falls. So what can we expect in 2021? Well, there's plenty of economic uncertainties out there. First and foremost is the effectiveness of the vaccine. Secondly, what long-term economic damage has been caused through the pandemic, and the capacity for further policy support. Also, will the rise in government debt lead to sovereign crisis, as we saw during the GFC? And as I speak here in early December, Australia's relationship with China will also cause economic uncertainty. There are some economic certainties, at least when you're speaking about the short to medium term. And the first of those is that interest rates are going to remain close to zero in the medium term. And similarly, inflation should remain very subdued in the short to medium term. So, what to do? First of all, remember that the stock market is not the economy. Secondly, beware of taking on too much risk. There is a tendency that in this low rate environment, people seek higher yields or move from cash reserves to investing in shares. The best strategy is always to maintain the investment plan that you've set out with and that you've discussed with your advisor. Remember, patience is rewarded. To make the point that patience is rewarded, have a look at this chart, which shows the market over the last 30 years. And you can see that there's been a number of economic crises that have occurred throughout the world, which at their time, everyone thought, how do we recover from this? But what you can see is that over time, the stock market, while it's got a few wobbles, it continues to go up. And we can expect much the same if we're looking over the long run. So once again, the economy is not the stock market. Patience is rewarded. I'm Steve Garth from the AdviseWise Investment Committee, and I look forward to chatting to you again soon. Bye bye.